Hello, everyone. Welcome. We will begin in about 5 minutes. Hello, everyone. Welcome. We will begin in about 5 minutes. Welcome. We're just waiting on a few others to log in. If you log on late, that's okay. We will be recording this. So we will begin in a second. Just working out those last minute kinks, making sure we got everything ready to rock and roll. Welcome to Profits First for Counselors and Therapists. I'm Dave Jenkins. I am excited to be able to bring you this opportunity in this class. One of my goals is to eliminate therapist poverty. There is no way we as therapists should be living in poverty or underpaying ourselves. So I've developed this class based on the popular book by Mike Michalowicz to be able to eliminate therapist poverty and help us learn how to build wealth within our practices. Many of us are in private practice, to be able to make a living. This is the only thing we do. Some of us, we're in private practice, and this is a part-time practice for us. And so it gives us an opportunity to be able to um, add a little bit of income to our family, to be able to improve our standard of living, and so forth. So you may have some questions throughout the book, throughout this particular class, and I encourage you to be able to text them in to me, write them in, or email me those questions. Now, a couple of disclaimers. This is a basic class, and I cannot address every single business issue. This is a tool for you to control your finances within your practice. And most of all, I want you to be able to take action and be profitable starting today. I want you to be able to take the information that I give you and immediately implement it into your private practice. These principles come from Mike Michalowicz's book, Profit First. If you haven't read his book, I encourage you to pick up his book and read the book. If you're like me and you like to cheat when you read, I listen to the audiobook. Mike does a really great job of reading his own book and actually adds some extra content within in the audio version. So I highly encourage you to even pick up the audio version. So on a basic level, what in the world is profit? Well, the old formula is income minus expenses equal profit. As an example, 10 minus 7 equals 3, back and forth. Well, this new formula is slightly different. The new formula when it comes to taking a look at profit is income minus your profit equals your expenses. I mean, just as much as 10 minus 3 also equals 7. What that really means is that you need to take your profit from your income first. Protect your profit and put it aside. Most people think of profit as the bottom line, what's left over. That right there will leave you in poverty. If you begin to flip it around and start thinking of profit as something that we can take in the beginning and then live off of the rest as expenses, there you could begin to develop some profit. So within the profit first system, Mike points out that you need to set up multiple accounts. Now, these accounts that I have listed here are some basic accounts. The basic accounts include an income account, expense account, payroll account, or owner's comp account, just in case you're in private practice by yourself and you don't have any other employees. The profit account and the taxes account. Now, as you see on the sides here, the income, expenses, and payroll, I set those up to be checking accounts. The other are profit and taxes, set those up as savings accounts. If you read Mike's book, he has entrepreneurs set up everything as checking accounts. I found that being able to make a little bit of interest on the profits and the taxes, hey, it does you good in the long run. The other accounts, I encourage you to set them up as checking accounts because you're going to be withdrawing money from them a lot more frequent. And savings accounts have limitations on how much money you can withdraw from them on a monthly basis. Now, to set these accounts up, you simply need to go to your bank and tell them you'd like to set up multiple accounts. Now, many banks have the opportunity to where you can name the individual accounts. As you see here, it's helpful to be able to name the individual accounts what they are, rather than leaving the accounts as simple account numbers. So what in the world is the purpose of the income account? Well, the income account is so that way you can collect all income that is coming into the business, whether it be from a checks, cash, credit card, PayPal, everything goes into the income account like a funnel. So that way you can keep track of what's coming in and how much you make. Now, the second account here is the profit account. And again, I said I set this up as a savings account. All money funnels through, funnels to the profit account. meaning you take a percentage of everything from the income account and send it to the profit account. Taxes. This is not your money. This is money that the government says that you owe them for the simple privilege of making money in our country. So everyone has to be able to pay taxes. And so you might even nickname this the government's money as a way that you can protect this money. I encourage you, as you set aside this money in savings, do not look at it as an additional savings account. This is the money set aside so at the end of the year, you can pay off your taxes. Or if you like some of us, we pay quarterly taxes. You pay it from this account here. Payroll account or owner's compensation account. Many small businesses fail to set up a payroll account where they can pay their employees directly from it or pay yourself. And most of us, we end up paying our employees and we forget about paying ourselves. We just take the money out of the regular expense account and whatever's left over. And at the end of the month, there's usually not a lot left over. So I'm going to talk to you about setting up a separate account of a percentage so you can pay yourself what you're worth and what you valued at. The expense account. Now, most companies, we have an expense account. Usually you have a expense account and a savings account. Those are the only two accounts that many companies have. We spend based on, most of the time we do bank balance accounting. We spend money based on what we see in the bank. We look up our account on our phone and we see, oh, there we have it. I have, $300 in this account. And that means I have $300 to spend. Wrong. The expense account, when you start looking at it as just a bank balance account, well, you start to spend everything that's in it rather than saying, ooh, I got a few checks that are about to clear. I have some things that need to be allocated. Well, as you set up your separate accounts, the amount of money that you have available to just look in, peek in, and spend and use gets smaller. Your profits are protected, your tax money is protected, your payroll is protected. And so now you can begin to look at, oh, this is what I have left over for expenses. But then some of you are saying, well, Dave, what if I look at that and I don't have enough money to pay off my current expenses? That is a clear indicator that your business does not have enough money to take care of its own expenses. That means you need to make some tough decisions and start cutting out some expenses. So right here, we're going to take a look at getting started in the basic allocations first. So if you were to open up your accounts today, call your bank today, go to the bank today, set up these 5 basic accounts, it may look something like this. You'll set up the first account as income. You may put a -100% or 100. Next one, profit -1, owner's comp -1, taxes -1, expenses 97%. Now, the reason I have -1% on profit, payroll, and taxes is so you could begin to exercise the muscles of allocating your funds. Most of us are not used to allocating our funds on a weekly or monthly basis. So right here, if your business cannot survive off of 97% for its current expenses, you got problems, bigger problems than that. That means you're living off of borrowed money, credit cards, or taking out money from your own or from another source of income rather than allowing the businesses to support itself. So for the first month, this is what you do. You set up these percentages and you get started that way. You put 1% in the profit account, 1% in the payroll account, and 1% in the tax account. And each month thereafter, you begin to up your percentages. You increase that percent to 2 for each of those until you get to the allocated percentages. We'll talk a little bit in the later slides where they should be. So what in the world are your expenses? This is where you need to assess the health of your business. Look at what your current expenses are, gather up your bills, gather up your bank statements. And I encourage you to do this over a 12-month period because sometimes we have some expenses that come once a year. I know my insurance that comes once a year. There's some things that I choose to pay every 6 months. And then again, I have some expenses that I have to pay on a monthly basis. So like Psychology Today, that comes out monthly. I have another directory that I belong to, and I pay that 6 months. Well, as I pay it every 6 months, I get myself a 30% discount. And so being able to look at some of those discounts is great. Uh, Incidentally, as an advanced procedure, I always encourage folks to have two types of expense accounts. One of it is a monthly expense account, and one is a annual expense account. And I'll talk a little bit more about that later. As you're looking at your bank statements, I want you to start to circle what can I eliminate? What can I get rid of? What is fluff? What is a subscription I do not need? And then begin to eliminate them. So for next month, you give them a call and say, hey, I'd like to suspend this account. I'd like to cancel it and eliminate those expenses. Get your expenses under control. So this right here, again, we're taking a look at the sample allocations. As we begin to allocate, so for the sake of argument, I earn $1,000 this week. And so at the end of the week, I will take the $10 and allocate it to profits, $10 to payroll, and $10 to taxes. The remainder, let's say that $970 will remain in the expense account. And so what I encourage you to do is pick one day out of the week. For me, it's Friday. And so every Friday, I will do an allocation, and I'll take my accounts and begin to take the money and say, I've earned this amount this week, and allocate on Friday. This will give you a nice rhythm of your cash flow. Each week, you'll begin to determine. Some weeks, it's a $1,500 week. Some weeks, it's a $2,000 week. Other weeks, it's a $800 week. So whatever it is percentage. See, the thing about profit's not about the just dollars and cents. Profit, in order to retain it, is about percentages. And so the more percent of your money you earn that you can keep, that there becomes profit. And what's left over, we use that for other things, expenses. So this right here is, the target allocations. And target allocations is the goal of where I'd like to get my allocations to. So as we take a look at this screen, I have my checking account, which 100% is always coming in at 100%, but the payroll account, my payroll account is set at 45%. That way, every time I make money, every time my employees bring in money, the contract workers that work for me bring in money, I will take 45% of all those total income and move it to the payroll account. So when I have once a month when I pay my contractors, there is already money there. I'm not scrambling at the end of the month trying to look at the expense account and saying, ooh, can I afford to pay my employees? It is nothing more disrespectful than to have employees that you can't pay on time, or you begin to take money out of your personal savings just to pay your employees, or you can't pay yourself your allotted salary. So in this example here, I pay my employees. I pay my contract workers, W-2 workers as well. And so there's money at the end of the month. I don't worry and I don't scramble. I don't sweat. I also take the allocations, 30%. This right here is the target. You want to get up to 30%. You say, well, what in the world? I can't get to 30%. Well, this is the goal over the period of the next year, is to reduce your expenses to at least 30%. Get to the place where you can also increase your profit to 45%. Also looking at taxes, increase your taxes to about 15%. Again, these are target allocations. They are not your current allocations. Your current allocations may be at 1% starting off. And for some of you all, it may even start off at 2 or 3%. Quarterly distribution. Let's talk about quarterly distribution, because like the big businesses, they issue out, a profit earning statements every quarter. So on the first day of every quarter, which is about 4 times a year, you will withdraw 50% from your profit account. Now, you will take half of that, and let's say for the sake of argument, I've accumulated $5,000 in my profit account, and now it's coming up on the first of the quarter. I will take $2,500 and withdraw it. Now, this right here is bonus money to you. It is on top of your pay. It is bonus because you own the business. I mean, you took the risk to go ahead and create a business and be an entrepreneur. So the profit goes out to you as profit distributions. What do you do with that money? Enjoy it. Take it to go on a trip. Take your family out. Go out to eat. Now, I want you to leave the remainder 50% in the account in order to serve as a reserve. So that way, as you continue to add, you will continuously build the reserve funds in your profit account throughout the year. But that 50%, take it out. Now, as an advanced procedure, if you were in debt with your business, I would tell you to do some other things to be able to use your profits to pay off debt and portion of it to spend. Now, some of you are going to say, well, I just started my profit account and I've only been adding 1% for this whole quarter. I only got, $50 in there. Take that $25 out and enjoy it. Go out to eat. Enjoy it because it is a bonus that you did something right. So this is an example of how I have my account set up. My accounts are set up to where currently I'm at 15% profit. So whatever money my business brings in, I will take 15% of it automatically every week on Friday, move it over to the profit account. And then payroll account. So my owner's compensation and payroll, I move everything to that. And right now it is currently at 45%. Now, for myself, I pay myself a hourly salary. So for the sake of argument, I will pay myself $35 per hour. So if I saw 10 clients this month, or I'm sorry, this pay period, which is every 2 weeks for me, I will take that and multiply that 10 times 35. So there is my salary, and that comes out of my payroll company, which is also automatically deducted out of the payroll account. Now you say, well, Doc, if I put in more money right there, what's the leftover money in the payroll account for? Well, since I only pay myself $35 an hour, there will be money left over in the account. And that money is left over to pay for payroll taxes, or that money is also left over for paying for my contract workers. So every time my contractors bring in some money, I'm not scrambling. And right now, my current taxes, I have it at 5%. Well, why do I have it at 5%? I have it at 5% because I also have a full-time job. And on my full-time job, I increase my taxes that are withheld on that job there. So therefore, at the end of the year, when I file my taxes for the business and my personal income, which is all looped in together, I'm not overpaying the government. So this, between my accountant and I, we worked out a good percentage to where my business still pulls out money. Emergency account, you will have emergencies, whatever it be, repairs to the office or emergencies that come up because this month you didn't make a lot of money. It comes out of the emergency account. And I also have a monthly expense account. And so for me, I have monthly bills that come out, and I have it set at 23%. My annual expense account, that right there takes care of my annual association fees and also my annual license fees. Everything that annually comes out, it's already pre-allocated. So I'm not scrambling one month to the next and say, oh my goodness, how am I going to pay for this? How am I going to pay for my license? How am I going to pay for the insurance? I've already got money allocated throughout the year, deducted from the regular income at 5%. Training, when there's training events that come up, so now I've created an additional account called training. And so there's something interesting, I pull it right out of the training account. I'm not scrambling. I'm not sweating. I'm not anxious over where the money is going to come from for a training event. It's already built in. It's already there. Now, an advanced technique, I would tell you this nice tip. When in doubt, create a new account. So if you're in doubt of whether or not you need money for something that's coming up, create a new account. You might have a library account. You might have a trash account, whatever it may be. With the current modern day banking, this is like using the old fashioned envelope system. You can pull the money out, start tucking it aside. So therefore, when you need it, it's already there. Then you no longer sweat on, oh my goodness, what do I need? What do I do? I got no money. This also forces you to be profitable, and it also forces you to be more efficient in the leftover expense money that you have. As a fundamental rule, we generally will spend what we have and what we see. But if you don't see profit, you don't see the taxes, you don't see the emergency account, you won't spend it. Now what? What do I do? Dave, I don't know where to start. I'm going to encourage you, take action today. Go to the bank, set up the accounts. I went to the bank and it took me just an hour to go ahead and set up all my accounts. I've been working on the Profit First system for the last 2 years, testing it out, tweaking it, and seeing what works for therapists. And I'll tell you, this right here, I've also coached individual therapists to set up their accounts, and many of them tell me, this has been a godsend. It's really saved them. Most people know about these principles, but we don't put it into action. So I'm going to encourage you, put it into action today. If you have more questions, I want more deeper information, deeper understanding, read Mike Michalowicz's book, Profit First. Mike Michalowicz's book is written toward entrepreneurs, those that are interested in making money. It is a great read. And so I encourage you, do that. Get support by community. Get a coach. Find someone that can hold you accountable. Get a partner. Tell them what you're doing. I assure you, if you also currently have an accountant, ask your accountant to read the book Profit First and then work with them. Many accountants will give you the old-fashioned technique of, well, let's just give you the bottom money, what's left over on profits at the end of the year, at the end of the month. That's not good enough. Some advanced classes that I'm looking at in the future are being able to look at contracts versus W-2s. What in the world are they? What's the benefit of each? Also looking at, how do we set up an emergency account for my business? What else can I do? Practice growth. I want to grow. How can I grow? I'm but one person. How do I grow into a group practice? How do I expand the services I offer? And also, taking a look at, some annual and training accounts. How do I set those up to my benefit? Those are some of the advanced techniques that I encourage you to, consider and think about. Later on, I will be offering more advanced classes inside another platform to be able to, connect up with other therapists and offer coaching services. Right now, I have two platforms that I use for offering coaching services. The first platform is Counselors of Color. That is a website that I developed to be as a niche directory for providers that provide services to people of color to be able to go and find other counselors that they may want to work with or of comfort that they connect with on a different level, whether it be language, ethnicity, and I encourage counselors to be able to celebrate their uniqueness. So on that platform, I have a directory. But on the side post or that platform, I also have premium membership. The premium membership offers people a place where they can get coaching from me. It also offers a place where we have community forums, we have webinars, we have classes, we have training. There's additional information on how to set up an ebook, how to set up my own webinar, how do I set up a live speaking event, or how do I even speak? How do I get comfortable speaking in public? So there is where I help individuals learn more about growing their practice in multiple streams of income. The current fee for that particular platform is $19.97 per month. Or if you want a great discount of almost $90, you could pay on an annual basis, which is $149.97. The second platform that I use is right here where this is being launched from, spouseology.com, which is also called the Relationship School. So there, my services are primarily for clients, whereas counselors of color, my services are primarily for other therapists. But even so, there's some great information on the Spouseology today. And it also offers a premium membership to where people can go and get free information. And I'm sorry, not free information. There's also free stuff on that platform as well. Webinars, classes, and information. I try and give away as much freebies as I can, but whenever things involves, my time and value, I also have a fee set aside for some of those information that's set aside because it's valuable information. I do suspect that in the future that my coaching fees and the membership fees will increase in price as the value increases. So I will continue to reassess that on a monthly basis and an annual basis. But as of now, $20 a month is not bad to get some great information to grow your private practice. Some individuals came to me because they said, hey, I need some individual coaching for growing my practice. I do offer coaching services as well. So the rates for those are $150 per hour. We meet over the phone, in person, in my office, or via webcam. Try and get those services to folks where they're at and what they need. Now, I know there'll be many more questions that may pop up. And so I encourage you, email me whenever you can if there's more questions in the future. We will continue to have more of these on the spot training. My goal is to keep it at about 30 minutes with the option of expanding as questions may pop up. As of right now, I enjoy being able to serve, the community. And my goal again is to make sure that we as therapists are not in poverty. We bring a very valuable service to the community. And there's no way that we, should be living in poverty. We need to find strategies and ways that we can continue to increase our services to those that are around us and also bring more value to the folks around us lives. Look forward to hearing from you all. Take care. Have a great day.